Time now for a look at the day's business news, and starting with one of our top stories, in fact, from today, the Wuhan coronavirus. It's raising fears of a global health emergency, which would also be an economic disaster. To tell us more about that, here's Brian Quinn from our business desk.
Well, Eve, with the World Health Organization preparing to declare whether the illness is or isn't a global health emergency, the organization is seeking to contain the outbreak without disrupting travel and trade unnecessarily. The virus's effects, though, are already being felt worldwide, with health screenings at a number of major international airports. Companies like Ford and General Motors, meanwhile, are restricting employee travel to and from China. Hardest hit will likely be the city of Wuhan, a key industrial and commercial hub. As transport links for the city's 11 million residents are cut off. The outbreak comes as Lunar New Year celebrations get underway. With hundreds of millions expected to travel around the country, China is bracing for the economic fallout.
There's a lot of commerce that gets done, retailers, families visiting each other. Think of it as Christmas and Thanksgiving all in 1 week. And so if people aren't together having dinner and doing the shopping, you can imagine that there is going to be a significant impact, specifically in the city of Wuhan.
Well, fears over the virus's impact are definitely being felt on the markets, with government bond prices surging in the U.S., Europe, and China as investors move to safe haven assets. Chinese stock index is taking some heavy losses, with Hong Kong's Hang Seng down over 1.75%, Shanghai Composite down around 2.75%. The Nikkei in Tokyo losing nearly 1% Thursday as new data shows exports down for Japan over 6% in December. Kospi and Seoul not too far behind it. Here in Europe, indexes opening in the red as well, with the airline, automotive, and luxury goods sectors all taking big hits due to their exposure to China. London's FTSE 100 down slightly. The CAC 40 here in Paris and the Frankfurt DAX each down around 0.33% at the open. Next, with new street protests rocking Beirut Wednesday, Lebanon's new prime minister said his country faces a catastrophe as his new government gears up for the challenge ahead. The Lebanese economy, already in bad shape, has taken a nosedive since protests began, and the new administration may have no other option but to seek foreign funding to avoid financial collapse. Andrew Hillier explains what's behind the country's economic woes.
Smashed up and shuttered, Lebanon's banks have become as much of a target as its politicians in anti-government protests. Demonstrators have lashed out against withdrawal limits that were imposed by the banks after the country began running out of US dollars. The Lebanese pound is pegged to the dollar, but with Lebanon's currency losing a third of its value in barely a few weeks and banks failing to provide enough dollars, the country's parallel black market has flourished, and in some stores the shelves are running empty. All that means that Lebanon's towering debt burden will be even harder to pay off. The country's public debt is 150% of gross domestic product, one of the largest debt-to-GDP ratios in the world. In recent years, the government has had to borrow more money to pay off interest on the debt, leaving less cash to pay for public services and leading to constant power outages, as well as a mounting trash crisis. The situation has been made worse by deep-rooted problems, such as the massive influx of refugees from neighbouring Syria since 2011. Endemic corruption is another big factor, and little has been done to renew the country's ageing infrastructure. Around 1/3 of Lebanon's population currently lives in poverty, but as the economy continues to crumble, the number of people living below the poverty line is expected to rise.
Well, the 2020 World Economic Forum remains underway today in Davos, Switzerland. This year's conference has seen the U.S. and France back down from a tariff confrontation over France's planned tax on digital giants like Google and Facebook. But Europe as a whole remains in America's trade war crosshairs amid ongoing conflicts over aircraft subsidies and other trade barriers. Washington has already hit EU wines with a 25% tariff. EU aircraft hit with a 10% levy. On Wednesday, Donald Trump threatened 25% tariffs on European cars if a new trade deal isn't struck. New European Commission President Ursula von der Leyen is reportedly planning to travel to Washington next month for trade talks with Trump. Here she is Wednesday.
We had very good talks, the American president and me, here at Davos, and we agreed that we want to move forward quickly. I think we have a lot in common, a lot to work for. We have some issues we have to solve, we shouldn't waste too much time, but sit down and negotiate immediately, and we have a follow-up process we're going to be in now.
And France 24's chief business editor, Stephen Carroll, is leading a debate on the future of digital taxes. That will air here on France 24 at 6:45 p.m. Paris time today. And finally, for business, Fender has a case of the blues. The iconic American guitar maker has been fined to the tune of £4.5 million in the UK over price fixing. Britain's Competition and Markets Authority is imposing the penalty as Fender Europe has admitted it required retailers to set a minimum online price, thereby violating competition rules. And that fine comes amid a crackdown by the CMA on instrument makers. Japanese keyboard maker Casio hit with a £3.7 million fine in August. Fender says it cooperated with the investigation and has changed its practices for online discounts. No doubt music to the ears of guitar shoppers here in Europe. Eve, back to you.
Brian, thanks a lot for that business update.